Hey everyone, welcome back to IQD Dinar News. Today's update is something every single Iraqi dinar holder has been waiting to see. We're talking about a market shift that's already creating buzz across currency exchange centers in Baghdad and Erbil. After days of watching the US dollar climb higher and higher against the dinar, Tuesday's closing session just delivered something completely different. Something that changes the conversation. Something that every holder, investor, and observer needs to understand right now. If you've been holding Iraqi dinars through this recent period of dollar strength, if you've been watching your position lose ground day after day, or if you've been wondering when we'd finally see a reversal, this is the moment you need to pay extremely close attention to. What happened during Tuesday's trading session isn't just another small fluctuation. This is a significant intraday reversal that tells us something powerful about the forces at work in Iraq's currency markets. Before we dive deep into the numbers, let me be absolutely clear about something. This video provides authentic market data and educational analysis only. We do not offer financial advice, and we never make promises about future currency movements. Always consult qualified financial professionals before making any decisions involving currency exchange or investment. Currency markets carry substantial risk, and what happened today doesn't guarantee what happens tomorrow. Now, let's talk about what actually happened in Iraq's currency markets on Tuesday, because this is where things get really interesting. The US dollar closed Tuesday's trading session lower in Iraq. Read that again. Lower. After all the upward momentum we've been tracking, after watching the dollar push from 147,000 to 148,000 to even higher levels, Tuesday ended with the dollar hovering around 153,000 dinars per $100. But here's what makes this absolutely critical. It's not just where the dollar closed. It's where it started and what happened in between. According to the latest verified market survey from Shafaq News Agency, the source we trust for authentic, on-the-ground currency data, the dollar traded at Baghdad's Al-Khafa and Al-Harithia exchanges at 153,000 dinars per $100 by the close of trading. These are Iraq's most established, most reliable currency trading centers. When we get data from these exchanges, we're seeing what's actually happening in real market transactions, not speculation or rumors. But here's the part that's generating all the attention. That 153,000 closing rate represents a significant drop from the morning session's opening. The dollar started Tuesday morning at 154,200 dinars per $100. Let me repeat that so everyone understands the magnitude of what we're discussing. The dollar opened at 154,200 and closed at 153,000. That's a decline of 200 dinars in a single trading day. Think about what that means for a moment. For days, we've been watching the dollar strengthen, pushing higher session after session. Dinar holders have been watching their positions lose dollar purchasing power with each update. Then Tuesday arrives, and suddenly the trend reverses. The dollar doesn't just stabilize, it doesn't just pause, it actually gives back funds 200 dinars worth of gains in one session. This is what we call an intraday reversal, and it's one of the most significant market signals we can observe. When a currency that's been trending strongly in one direction suddenly reverses and moves substantially in the opposite direction during a single trading session, it tells us that something fundamental has shifted. Either supply dynamics changed, or demand patterns adjusted, or market psychology transformed, or some combination of all these factors came together to create this reversal. For Iraqi dinar holders, this is the kind of movement that changes everything about how you view your position. If you were feeling discouraged watching the dollar climb, Tuesday's session just gave you concrete evidence that trends can reverse. If you were wondering whether the dinar would ever regain ground, Tuesday answered that question with a powerful demonstration of market dynamics working in the other direction. Now let's examine what's happening at street level in Baghdad's exchange shops. because this is where everyday people and businesses conduct their actual currency transactions. The local exchange shops in Iraq's capital are now selling the US dollar at 500 dinars per $100. If you need to buy dollars, that's your rate. On the buying side, if you're converting US dollars into dinars, exchange shops are offering 500 dinars per $100. That spread between buying and selling is 1,000 dinars, which is consistent with what we've been seeing in recent sessions. This tells us something important. Even during a significant intraday reversal, the exchange shops are maintaining their standard operational margins. They're not panicking. They're not dramatically widening spreads in response to volatility. They're functioning normally, which indicates that while the market experienced a meaningful reversal, it happened in an orderly manner without chaos or extreme dislocation. Now let's shift our focus to Erbil, because the comparison between Baghdad and Erbil always reveals important insights about Iraq's currency market dynamics. In Erbil, the capital of the Kurdistan region, selling prices stand at 200 dinars per $100, and buying prices are at 154,000 dinars. Do you notice something fascinating here? Erbil's rates are actually higher than Baghdad's closing rates. While Baghdad closed at 153,000 at the major exchanges, Erbil is showing 154,200 for selling. This regional difference tells us several important things. First, it indicates that different markets within Iraq can have different pricing dynamics based on local supply and demand conditions. Second, it suggests that the reversal we saw in Baghdad may not have fully transmitted to Erbil's market by the close of trading, or that Erbil has different liquidity conditions. But here's what's also interesting about Erbil. That spread between buying and selling is only 200 dinars. We're looking at 200 selling and 154,000 buying. That's dramatically tighter than Baghdad's 1,000 dinar spread. This continues the pattern we've observed where Erbil consistently shows tighter spreads, suggesting better liquidity or different operational dynamics in the Kurdistan region's currency markets. So now comes the question that everyone watching wants answered. What caused this reversal? What happened during Tuesday's trading that pushed the dollar down 200 dinars from morning to close? To understand this, we need to think about the multiple forces that drive currency markets in Iraq's unique economic environment. First, let's consider Central Bank of Iraq intervention and auction dynamics. The CBI conducts regular currency auctions to manage dollar supply and stabilize exchange rates. If the bank increased auction amounts on Tuesday, if they relaxed eligibility requirements, or if they injected more dollars into the banking system, that would immediately affect street market rates. More dollar supply relative to constant or decreasing demand naturally pushes the dollar price down. The CBI has tools to influence currency markets, and they use them when they determine that rates have moved too far in one direction. Second, there's the possibility of reduced import demand or timing effects. If Tuesday saw lower than normal demand for dollars from importers, perhaps due to weekend effects or business cycle timing, that reduction in demand could contribute to downward pressure on the dollar. When fewer people are competing to buy dollars, prices naturally stabilize or decline. Third, we can't ignore market psychology and profit-taking behavior. After watching the dollar rise substantially over recent sessions, some currency traders and holders may have decided Tuesday was the right time to sell dollars and take profits. When multiple participants make the same decision simultaneously, it creates selling pressure that pushes prices down. This kind of coordinated behavior doesn't require conspiracy. It just requires traders looking at the same market conditions and reaching similar conclusions about when to exit positions. Fourth, there might have been specific news, announcements, or developments that were not immediately aware of that influenced market sentiment. Sometimes currency markets react to information that takes time to become publicly known. Political developments, policy announcements, or economic data releases can all trigger market reactions. The honest truth is that it's almost certainly a combination of these factors working together. Currency markets are complex systems where multiple forces interact constantly. What we can say with certainty is that something significant shifted during Tuesday's session to create this 200 dinar reversal. Now let's talk about what this means practically for you as an Iraqi dinar holder, because this is where market data transforms into real-world implications. If you're holding dinars and you've been watching the dollar strengthen session after session, Tuesday's reversal represents the first significant pushback. The dinar regained ground. Your holdings gained dollar purchasing power compared to the morning session. If you were planning to convert dinars to dollars, you'd now receive more dollars per dinar than you would have at Tuesday's morning rates. But here's what's critically important to understand. One day's reversal doesn't automatically mean the trend has completely changed. Currency markets experience corrections, pullbacks, and reversals within larger trends all the time. The dollar could resume strengthening tomorrow, or this could be the beginning of sustained dinar recovery. We simply don't know yet. This is exactly why we provide daily updates from authentic sources, because understanding whether this is a one-day correction or the start of a new trend requires tracking multiple sessions over time. For businesses operating between Iraq and dollar-based economies, Tuesday's movement has immediate implications. If you're a business that needs to bring dollars into Iraq, you're now getting slightly fewer dinars per dollar than you would have received at morning rates. If you're trying to convert dinar revenues into dollars, you're in a relatively better position than you were earlier in the day. For long-term investors and holders, Tuesday's session provides valuable education about market behavior. It demonstrates that even strong trends can reverse. It shows that supply and demand dynamics are constantly adjusting. It proves that the Iraqi dinar isn't locked into perpetual decline against the dollar. Markets move in both directions, and understanding this volatility is essential for managing expectations and making informed decisions. There's also an important psychological dimension to Tuesday's reversal. After days of watching discouraging dollar strength, seeing a 200 dinar reversal can shift emotional responses. Hope returns, confidence gets a boost. The narrative changes from, when will this dollar strength end, to, is this the reversal we've been waiting for? But successful currency market participants manage these emotions. They don't let one good day create overconfidence, just like they don't let one bad day create panic. Let me emphasize something critical about information quality. The verified Shafak news market survey that captured this reversal is what separates informed analysis from speculation. We're not guessing about what happened. We're not relying on social media rumors. We have actual market data from operating exchanges showing real transaction rates. This authenticity matters enormously when making decisions about your positions. Looking at the bigger picture, what does Tuesday's reversal tell us about Iraq's currency market structure? It tells us several important things. First, these markets are responsive. They react to changing conditions. Second, they're not completely controlled or fixed. Price discovery is happening based on supply and demand dynamics. Third, there's enough liquidity and participation for significant intraday movements to occur. Fourth, regional markets like Baghdad and Erbil can show different pricing, indicating a somewhat fragmented but functioning market system. Here's what dinar holders and observers should be doing right now. First, stay informed through verified sources. One reversal is interesting, but tracking whether this becomes a trend requires daily authenticated data. Second, avoid emotional reactions in either direction. Don't panic when the dollar rises, and don't become overconfident when it falls. Third, understand your specific situation and time horizon. If you need to exchange currency soon, current rates matter enormously. If you're holding long-term, single-day movements matter less than multi-month trends. The takeaway from Tuesday's session is powerful and clear. After days of dollar strength, we witnessed a significant 200 dinar intraday reversal. The dollar opened at 154.200 and closed at $153 at Baghdad's major exchanges. Exchange shops are operating with selling at 153,500 and buying at 152,500. Erbil shows slightly different dynamics with rates at 154,200 selling and 154,000 buying. The reversal demonstrates that currency markets move in both directions and that trends can shift based on changing supply and demand conditions. This is our complete breakdown of Tuesday's remarkable trading session on IQD Dinar News. The reversal is real, the data is verified, and understanding what actually happens separates informed participants from those reacting to rumors and speculation. If you found this analysis valuable, smash that like button right now. Subscribe to the channel and hit the notification bell so you never miss critical daily updates, especially during periods of market volatility like this. Drop a comment below and tell us, how are you interpreting Tuesday's reversal? Do you think this is the start of dinar recovery or just a temporary correction? Your perspective helps our entire community understand different viewpoints. Remember, in currency markets, verified data and disciplined analysis beat speculation every single time. Stay informed through trusted sources, understand that markets move in both directions, and make decisions based on facts, not emotions. This is IQD Dinar News, committed to bringing you authentic market intelligence when you need it most. See you in the next update.